What's up? Zach Spatolsky here with Investment Essentials. Welcome to our first video tutorial. Excited to have you guys here. We got some really good stuff lined up for the coming weeks in these tutorials. We're going to start covering a lot of technical analysis and just how to read charts and just the basics behind investing. And it's really, I'm really excited to do it because that was one of the things that frustrated me the most during investing. So with that said, we are here in Google Finance, and we've decided to use Google Finance just because it's free to use for everyone and very simple. You can always port these methods over to any platform you're using, so keep that in mind. Now today we're going to be covering moving averages. We're going to cover simple moving averages as well as exponential moving averages, and I'm going to show you how to put those together to create what's called the crossover method. It's a very common way to see the momentum of a stock. And we'll cover MACD indicators in the next video. I'm pretty excited about that one because that's very important. So if you've never used Google Finance before, it's pretty straightforward. We've got the news on the right hand side here, some basic information of the stock up top, as well as the most recent trade, which is right here. If it's a pink sheet stock, it's going to be delayed by 15 minutes here on Google Finance, but if it's a NASDAQ, it's going to be real time. So one of the things I like to use a lot is on this left panel here, you'll see historical prices. Click that and it'll give you this page here with just the dates of all the prices, and my favorite is the volume. We can kind of go back and see how this stock has accumulated a lot of volume and people have gotten interested in it, and it's definitely visible here. You can see it. So we'll take a look at that later on in some more videos, but we'll come back to summary here, and we'll start with simple moving averages. This is the chart here. If you go to the bottom left, you'll see settings, plot feeds, and technicals. Go ahead and click technicals, and right here we have some, but we'll start over. Add technical, select the drop down, and select the first option, which is simple moving average. You'll see that Google fills in this 20-day period right here. That's just the default. We can use that for right now. It's a good short-term outlook. You can see that this stock looks pretty good. I mean, it's definitely on an uptrend, but just recently the price itself has started to kind of depreciate here. So let's get into a little more detail. This basically what a simple moving average is it just smooths out the average price. It's just a better way to look at it, so you don't see these jagged lines and get kind of confused on what's happening. So you can see the red line here is the SMA. It looks like it's going up. So let's just dive in a little deeper. We'll create one more technical here. This time we'll select simple moving average again, and as you can see, Google put 50 as our default because it assumes we're doing this whole crossover method thing. So you can see now there's these two lines. There's the red line, which is the short term or the 20-day period, and below it there's this 50-day green line. They're both SMA, they're both simple moving averages, but they are just different time periods. So what we'll do is we'll just zoom in so we can see some more detail here to 1 month. And as you can see, both of them are leveled out here up until about the 4th of August, and then you see the short term break out of this pattern and kind of rise above the long term, which is what we want. That's a buy point. When it went right here where it breaks out, that's a buy point. And it's all positive, looking good, a lot of momentum here. All of a sudden, about the 13th or 14th of August, it kind of dies out and just kind of drops here. All of a sudden, the short term hits the long term. That's a sell point, and then we have some negative momentum here. This would not be considered a buy point using the crossover method. So to keep that in mind, this stock from a long-term point of view out here looks like it's going up, but you zoom in, look at the detail. On the short term, it's not looking too hot right now. It's looking like it lost all of its momentum. So we'll take a look at another stock here. We'll take a look at bioelectronics. And for this one, I'll just kind of go over the exponential moving average. We'll come down to technicals again. We'll remove both of these, and we'll add another one, and it's the second one down, exponential moving average EMA. The default is 20 days, as you can see here. And you can see this line is drawn in here. And the difference between simple moving averages and exponential is that exponential favors recent changes, so it reacts quicker. And that can be a good thing, especially in a short-term outlook. If you're definitely into you're into short-term trading, you're going to want to take a look at EMA more than SMA, because EMA is favoring what's going to happen right now. So let's zoom out here. Let's take a look. Let's go to 6 month. You can still use EMA in the long term. It just it doesn't do a whole bunch right here. You look at that line and it's just kind of smoothing out the jagged lines. It doesn't tell you a whole bunch. So let's add one more. We can use the crossover method on EMA as well. And let's zoom into 1 month. And you can see that we got the red line above the green, which is good. We've got the upward momentum here. Right around the 28th, 27th here, it lost its momentum, had downward sell point right there at the crossover. Negative momentum, picked it back up here, and that's a buy point on the 3rd of this month. And then all of a sudden, you've got this this forward momentum here, and right now it looks like it's kind of neutral. We don't really see any momentum. It may have picked up here in the last couple of days, but it's not looking too strong right now. And that is again another crossover method. You can use either SMA or EMA. It just depends on what you're looking at. If you're looking at more of a short term, people use EMA, but it's recommended to use both. That way you can kind of get both pictures here. So take a look at that. Use it on a few stocks. See what you think. It's a very effective way to see the momentum of stocks. And we're going to cover MACD indicators in the next video, so take a look at that.